Boy, what a comeback after a long weekend, and what a hit really that the markets took yesterday. Sub the 21,200 mark, and it was a very, very sharp grinding sell-off pretty much across the board. We just about defended that 21,200 print, and it's a savage cut of more than 300 points that you saw on the Nifty alone. And more importantly, the kind of individual sectors where you saw acute profit taking, and I'm not even talking about stock specific movers, Nikunj, like a Z here, but the entire PSU basket all across the board.
See, it suddenly does not feel like a bull market.
Yeah.
And it just does not feel like a bull market. It does not take much for the sentiment to change from rara sentiment in the first week of Jan versus where the markets suddenly are. Even though price damage has not been very massive, but the market mood suddenly is not looking all that exciting. So what has happened? You cannot blame it on just one. Markets were due for a correction. Assumption that FIs will come back, that's got challenged. There are margin triggers which got triggered largely because of unwinding in the Z stock, which had a complete domino effect on some of the other dominated margin dominated names, and everything has actually come together. So there was a bit of a technical overhang, sharp reversal in terms of the liquidity, and see the kind of comments what we've got from banks where they're indicating that look, for some banks NPAs are coming up, for few banks growth seems to be coming back. A large part of the market, which is financials, which was expected to come out with good solid led set of numbers, that seems to be stalling a bit. And also the market reaction, Asha, just look at the market reaction. Every day you got one name or one casualty. Last week it was HDFC Bank, before it was Polycab, then we saw a very harsh reaction in tech names, and then it was Z followed by railway stocks. So the markets are in a sense now getting hit, and they're getting hit hard, and they're getting hit hard from all corners. Yeah. So you can't just blame it on all the factor. Thankfully for us, global cues have not just fallen apart. So the handover is decent. The initial set of tech numbers which have come from US, they are also decent. So you can make a case that right now it's a local stroke technical factors which are at play. But yes, it just does not feel like a bull market. Just like the weather is changing in Mumbai, it's getting chilly. It's getting rather chilly.
God, it is.
Windy
yeah,
and chilly, so
is.
that is what it is.
Yeah, looks like it. FIIs continue to sell, and like you said, pretty much everything has been hit. So for instance, in yesterday's trading day, it wasn't just the banks where, yes, it was below the 100 daily moving average on the Nifty Bank Index, but you had the mid and the small cap indices as well that traded below their 20 DMA. Ditto was the case when it came to the real estate index or autos, energy. In fact, I think barring pharma, no sector even managed to hold out in the green. And while I know we're not blaming just one stock, we can't help but notice the kind of impact that an HDFC Bank continues to have because it hit its 52-week low, the biggest decline that we've seen in the last 3 years. And even if we're looking at the overall F&O and FII trend, it's looking rather bleak, Nikunj.
See, bleak is not the word, Aman, but one thing is evident, that the market trajectory, which was that you buy higher and sell higher, that is getting challenged. Now the market mood is that you buy when there is a bad day, you buy when, you buy at lower levels. I think that this market now will see two factors which would be at play. Number one, the weak hands would be forced to exit. And we've seen evidence of that, let's say in railway stocks or PSU stocks or defense stocks. So we've seen evidence of that, but folks who were just buying momentum, they were chasing price, they were buying today, selling tomorrow, and they were pocketing in 10-15% gain. That entire chain of easy money may just come to an end. So I think that one factor would be at play. Second, I think the real true value guys will only come when there is a little bit of panic or further drawdown in the market. And on top of that, you actually have FI selling. So I think more than anything else, I think it's the demand supply equation which in the near term could look slightly imbalanced. So there is compulsion of folks who bought on margin. They would be forced to sell because price action has come down. The true blue value guys are unlikely to be coming out at this level because markets entirely are not cheap, and on top of that there is FI selling. Now combination of all these three factors together in the near term may just create a liquidity vacuum. But I continue to maintain that you want to be a buyer. You want to use the decline to your advantage. You want to be selectively putting money to work. this may not be the level to put money to work, because I continue to maintain that the seasonality in January is something which has not been on our side, and I'm not surprised with what all is happening. Now what will happen is that, everybody will start looking at value, and closer sub 20,000, maybe another 5%, 10% fall in some individual stocks, value will start surfacing up. It is not that it is game over. Game is not over. The bull market is still intact, but this is a painful patch in the bull market where the excesses which got created, they are going to be cleaned out. There is something called past, and the past of October, November and December has been so nice for everybody that you tend to extrapolate that kind of a price action in future, but does not work that way.
Yeah. And just talking about the way forward, like you said, that the sectors where you had stretched valuations, largely your PSUs, your railway, defense, and pretty much across the board the PSU pack, that may remain volatile for some time, because yesterday is just the first wave of profit taking which has set in.
I think there was compulsion which was at play. So what was happening, if you look at the number of stocks in FNO ban, you look at the margin funding. Margin funding, I just break it for a view, is that you pledge some shares and then on top of that you build a position. When stock prices come down, you'll have to put in more capital, or risk management will force your broker or your manager in this case to sell those stocks, and that is what I think was at play. So this entire easy making money chain which was there, I think that will get challenged. One, this market will challenge now, at least in some of the stocks, patience as well as a commitment. So if you are a weak trader, if you're a hand on heart investor, the market will shake you. I think that a shakeout is always good. It will create good entry points and it will shake out the weak players. I'll use that analogy which I've used in the past, that imagine a tree. When a shakeout happens, weak fruits and overripe fruits, they both will fall, but that will make the tree slightly more resilient to really weather the next storm. So I think the tree was loaded with a lot of weak fruits and with a lot of ripe fruits. The shakeout will only lead to that, but that does not mean that the bull market tree has got uprooted.
Okay, so we've not been uprooted, only making the case for the fact that we can stay more resilient, stronger. But just 3 working days in this week, and you've got a whole host of numbers that have been packed into the next couple of days. So from today and tomorrow, you've got big numbers like the likes of Bajaj Auto, Tech Mahindra, Tata Steel, SBI Life as well as JSW Steel. When it comes to Tata Steel, expecting a rise in margins and revenue. Tech Mahindra margins could be a bit impacted this time in Q3. So we'll be watching out for that. Bajaj Auto as well, the festive sales, whether or not that's going to be a booster shot, we'll have to wait and watch. So Nikunj, clearly keeping an eye out on a whole host of big numbers.
See, out of the big numbers, I think Tech Mahindra would be of immense importance, and that's largely because of change of guard, and they're looking at restructuring the team there. And I think the change in a sense is, so that is one stock where everybody would in a sense be curious. Bajaj Auto, the first of the big auto number, and Bajaj Auto, because of the buyback, the stock had hit an all-time high. Our margin worry is getting over. Is the two-wheeler space making a comeback? So that becomes the second stock. Tata Steel, frankly, is not like a stock which everybody really is waiting or expecting anything stellar or spectacular. So that, in a sense, is not going to be a market-moving number. Actually, Tech Mahindra is also not a market-moving number. The market-moving number would really be, to my mind, would be to some extent Bajaj Auto, purely in terms of the first indication which comes from auto. So numbers, folks, are not that bad, but it's just that market expectations are so high that this in a sense is getting challenged. I just want to make one more point. I'm just change gears here. Look at FI numbers YTD, and that is where I think you could ask yourself, what is this? Why are they selling? Why are they selling? They were supposed to be coming back in 2024. That is what markets assume. And I think beginning of the year we were very clear, 1st Jan, 2nd of Jan or 3rd of Jan, that assumption that FIs will sell, FI will buy, that will get challenged, and I think that is what is happening. So for me, if you ask me, the sum total of this number, 10,000 crore, 9,000 crore, 3,000 crore, 545 crore, another 3,000 crore yesterday, you add that up, Aisha, it's actually more than 25,000 crore, 26, 27,000 crore in a matter of just 3 weeks. And that's happening in banks. Nobody expected that. I mean, where are they selling? What do they own? They own banks. And so these are 2 big assumptions which have got challenged. Number 1, FIs are selling. and banks are not performing.
And you know, that's the thing, because the market had pinned its hopes. I mean, not that you needed only FIIs. 2023 was all about DII participations. They're the one who kept the markets intact and, you know, gave them the leg up. But with the kind of assumptions that were made of an FII comeback in 2024, what happens now if they don't really make that comeback, which they haven't till now?
Aisha, I think they will come back, but at what level they make a comeback, I think that is the question. Because frankly, if you look at the positioning of Indian market, I think Indian markets are growing, earnings are growing, economy is in a good shape, inflation is coming under control, the political risk is behind us, infrastructure sector growth is there, IT is still growing, banks are still growing, the world is in a recession, Europe is getting old, China is in a debt mess. So they have no other option but to stay invested. What we need to understand is that at what level they would come in. I mean, everything has a price.
When do they find valuation come from?
Everything has a price. Everything has a price. So I think somewhere you are trading way above your averages, and that's the price you have to. That is where I think the whole adjustment in the market will happen. It could be a time-wise correction. It could be a price-wise correction. So this market winter is not going to last long. I mean, it is like Bombay winter. It is not Delhi winter, that it will be a prolonged winter with lot of fog. This is a Bombay winter where you actually need to not even take out your woolens for next 2 or 3 days. It's like a passing winter.
Just switch off
the AC and you're fine.
Yeah.
So I think few bad days, I mean, that's what it is. I think markets will make a comeback. In what shape and size, it could be slightly different, but just think about it. What are the options there?